So first of all, let's start with QE because that's perhaps the easiest thing. And here's the analogy that I have that is not a perfect analogy, but I want to share it with you because I think it kind of helps me to think about it. So, you know, we have the economy and we have the circular flow of money or liquidity through the economy. So we could, if we imagine for a second that the economy is a house and the circular, there's the liquidity, the money that makes everything work is like water flowing in pipes through the house. And we just imagine for a second that all the taps are on and we have a system for circulating the water back to the top of the house. And then it flows through all sorts of different pipes into sinks in the bathroom, into the shower, and what we need for a happy house in this special world is that the water's flowing nicely, and in some sinks it's half up, and in other sinks it's 1/4, and that's kind of like liquidity flowing through the system, if you like. And then there's something that takes the water from the top and recycles it back, from the bottom and recycles it back to the top. Now, you know, something that we've never really seen before, half the taps in the house are switched off. That's effectively what the lockdown does. It stops activity left, right, and center. And suddenly baths are emptying out, basins are emptying out. And so the Federal Reserve is running around with buckets of water trying to fill the different tubs. And now somebody comes and says, oh, the Federal Reserve shouldn't be doing that. I think my point is that the Federal Reserve is pushing liquidity into places where liquidity is dried up. For various reasons, people can't buy high yield bonds, and the Federal Reserve, unlike the 1929 crash where they said, oh, well, that's the private market, we are just going to sit here and watch. The Federal Reserve is coming and doing absolutely the right thing, and that's what Warren said when he said that Powell absolutely is as important as Ben Bernanke is. They're very tough decisions to make, but they were the right things to do. And then so you have these currency hawks, and there are people in Germany who are these currency hawks who say, oh my God, this is unacceptable. The federal balance sheet is blown up. We're going to have inflation. We don't have sound money anymore. So we don't know what the outcome is, but we do know that if the Federal Reserve hadn't opened the floodgates, run around with buckets of water through the house and filled up things that were drying up, we would have caused a terrible economic crisis. And so that was absolutely the right thing to do. And we don't know what the consequences are, but we absolutely know that if the Fed had not done that, it would be disastrous. And I actually think that it's very likely that the Federal Reserve will figure out, and other central banks will figure out, how to withdraw the liquidity once the economy restarts. So I actually, you know, the fact that the Federal Reserve balance sheet has expanded by so much is a very positive sign, actually. It shows that we have policymakers who have learned from previous financial crises, who understand how to keep the economic machine going and are doing the right thing. So there I don't have an issue at all. Okay. And then, you know, so if you go to the real economy, I mean, it's shocking. It's absolutely shocking to see 25 million unemployed. You know, that is just a scary, scary number. And who knows what the consequences of it are. And if you look at, you know, I mean, my little office, Dante, and, you know, the few mailings that we do, and of course, a lot of that got slowed down or stopped. And now, you know, we want to continue with the mailings, but, you know, the post office doesn't want to accept post that is going to countries outside of Europe. We don't have, you know, the things that we want to mail out, we don't have. So our little office supply chains are disrupted. And if our supply chains are disrupted, I can't even start to think what supply chains look like in the broader economy. So the disruption there is enormous. And I was already 3 or 4 weeks ago sort of saying, look, we need to, the damage from the economic shutdown is going to be greater than the damage from the loss of life because of the virus. And so I think that, I mean, when I look at it, I just say there is a very high likelihood that we have an enormous recession, huge, huge recession. But having said that, I think that there is a part of the story that the newspapers and the financial press want to scare us more. Well, it's not they want to scare us more, it's that they want to sell newspapers. And so the headlines scream, and we're in a fearful state. And so it's not going to be as bad as those headlines say. The reason why is that, again, government spending is going to stabilize it's not going to replace the spending that is lost. And but government, that it's in times of recession, government stabilize the economy. And Warren Buffett said that sort of the net wealth of the United States is around, he put it, I think, at $100 trillion. And, you know, for the country to spend in this crisis $5 trillion to help it get through is something that the country can afford to do. So, but having said that, it would have been ideal for us to go through this crisis somehow without shutting our global economies down. And I think that it's still not clear, Dante, whether, you know, it may be that we don't get a second wave, or the second wave is very attenuated and the economy actually roars back pretty quickly. We can't rule that out. It's very possible that I mean, I wouldn't rule it out.
Yeah.